The trouble with gold is starting now. Switzerland has already begun decreasing their interest rates. And this is going to come to us with our gold price. Here's how it works. Gold and silver, mainly gold, has a clear inverse relationship with interest rates. So when interest rates are high, people want to put their money into dollars. In treasuries, when interest rates are low, people get frightened by the weak currency and the weak treasuries, and they want to go into precious metals like gold. So we've been waiting. If any community in this country, in the States, has been waiting for interest rates to drop, it's us in the gold stacking and silver stacking community. We've been waiting because we know that this is really going to pop. This is really going to get a big boost in price, in spot price. Now, we're already happy with the price we've gotten recently in our jumping gold, but listen closely to what is about to happen. Switzerland has moved first. They decreased yesterday. They decreased their interest rate, and every other Western country is looking at this. This is going to have impact in two ways. The first is that other countries are going to watch and see how this plays out. Switzerland already has a very low rate of inflation. They're below 2%, so they're feeling very confident. Other countries are going to watch this, and this means that Western countries do not need to wait for the United States to take the lead. So there's a shock right there. I mean, we rarely see this. We don't need to wait for the United States. The other way that this is going to play out is that countries like Germany has already recently reevaluated their gold. And that means that they could set their own spot price for gold. Every country could do that. Specifically, the BRICS nations. Those BRICS nations that already are looking for different ways to create a currency that is backed by gold. They could set their gold value completely different from Western countries. Right? They could easily set their gold value to be an astronomical number, which would throw off the entire gold market. This is real. We've heard recently that BRICS nations have tried, or they're still trying, to create some kind of cryptocurrency backed by gold, something along those lines, that could play out. There could be some kind of digital currency that is backed by gold for BRICS nations. But when we look at other countries taking the lead on this, typically it's the United States, and especially since the pandemic, people are watching the U.S. What is Jerome Powell going to do with interest rates? So to see other countries take the lead, like Switzerland dropping their interest rate, I mean, that really makes me think that the value of this gold is going to soon really be in a place where we never thought it would happen. I mean, we never thought, even a month ago, you couldn't convince me that gold was going to jump up to 2,200 and hover there. Hover around 2,200? Never. I would not have believed you. That's why I love gold. That's why I've always been in on gold. That's why I love it. Because you don't know. You really cannot tell when these things are going to play out. But watching Switzerland take the lead on this is exciting. I really want to see what happens. I want to see what other countries, if they follow Switzerland's lead and drop their own interest rates, I think that will impact how the U.S. deals with our interest rates as 2024 plays out. We heard this week that there's going to be 3 cuts coming up. That's a goal. The goal is 3 cuts coming up. Let's see what happens. Either way, it is definitely going to impact the price of gold for sure. And I'm certainly, if I could afford these, I got this gold when the prices were much lower. Right now, I'm not in a position to pick up a full ounce of gold. Certainly am not. But I'm absolutely bullish still, and I'm planning to get back into full ounces and stacking full ounces for sure.